Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, March the 18th. Well, the markets have settled into a more wait-and-see kind of trade. With the war escalating, concerns do remain about the grain shipments out of the Black Sea region. However, as we head into the spring planting season for the Northern Hemisphere, the markets also recognize the ability for other nations to produce grain and oilseeds. Thus, a pause in the upswing in the markets at this time. The South American harvest has gone well, and the second crop planting is proceeding at a good pace as well. This also has put a pause on higher prices. The equity markets continue to gyrate between good job reports, higher inflation, a growing economy, and rising interest rates. And we can expect this to continue to challenge the marketplace for a while longer. Our May canola contract this week was down $6.40 a ton and closed out at $11.2480. The canola spent most of the week in negative territory on the losses that we saw in the crude oil contracts. However, as crude oil turned and started back up, canola also trimmed its losses. The May soybean contract lost 8 cents for the week. It closed at $16.68. The May corn contract, well, it was down 21 cents a bushel and it closed at $7.42. Our July Chicago wheat contract was down 32 cents this week and it closed at $10.45. The July Kansas City wheat contract was down 19 cents over the week and it closed at $10.62. The July Minneapolis spring wheat contract, well, it actually eked out a little gain. It was up 2 cents on the week and it closed at $10.55. The wheat markets found some support down at their lower levels and have traded sideways range most of the week. With the war starting into its fourth week now and the Russian attack on the city of Lviv this week, the wheat prices gave up their gains for the week and finished the week lower. Our March Canadian dollar, well, it's creeping higher. It was up 70 basis points on the week and it finished at 79.3. Crude oil had another tough week in the marketplace and it actually got down to a low of $94 a barrel, coming off a high a week and a half ago at $130 a barrel. It did manage to turn around and work its way back up. It closed the week at $104.73 a barrel, which was down about $4.60 a barrel for the week. For next week, well, the May canola futures, well, they continue to find underlying support in that $1,100 area. And we're going to look for canola prices to continue to move back and forth, but higher. And we'll be looking for a retest of the $11.4370 May high. However, with the prospects of a CP rail strike looming, the May canola contract may struggle to move much higher in the short term, so this does bear watching. For spring wheat, well, we may have seen the highs for wheat. However, that does not mean that we cannot go back up to retest these highs. And we're going to look for July spring wheat futures to continue trading between $10.25 and $10.75 with an eventual move towards that $11 area. I'm Ed Baldwin with your weekly wrap-up for Friday, March the 18th.